Hey guys, okay, so today we're going to talk briefly on OBV or on balance volume. Um, this indicator really kind of explains itself, or it speaks for itself. It's not a difficult indicator to understand or learn, so this should be a relatively quick video on what OBV is and how to use it. So let's dive right into this and let's check it out. Okay, so what OBV is, or what it stands for, is on balance volume. Now, this is a technical trading momentum indicator that uses volume flow to predict changes in a stock price, or in our case, a coin price. Um, so it's this indicator. The guy who created it believed that volume was the key force behind markets, and he designed OBV to project or to predict when major moves in the markets would occur based on these volume changes. So there's some key takeaways right here that we're going to look at real quick. Okay, so on balance volume, on balance OBV is a technical indicator of momentum, and it uses volume changes to make make price predictions. Excuse me, choking on my words there. Okay, so OBV also shows crowd sentiment that can predict a bullish or bearish outcome. And comparing relative action between price bars and OBV generates more actionable signals than the red or green volume histograms that are down here at the bottom of your charts. And we'll explain a little bit more about what I mean by that here right now. So an easy way to really understand OBV, or how to use this indicator. Now, of course, this was a custom-made indicator, and there is just a regular free one that is on TradeView, and it's really actually the exact same. You see there's no difference between the movement in the OBV. The only difference is the one that we have exclusive to our group is you can see the differences in the red and the green to signal bullish and bearish trend reversals, while this one does not, but it still can be read the exact same way. I find it better with the color differences to really show where the trend or shift changes are going to occur. But it still works the same. So if you don't have access to the Warrior OBV, or the one that's exclusive to our group rather, you can still use the regular one that is free to TradeView. Okay, so let's dive right into this, and let's see the differences between the volume candles that a lot of people look at and its relationship to OBV and price. Okay, so here OBV is green, and you see some weakness. See how this kind of zigzags and ups right there? Let me zoom in just a wee bit there. I'm trying to hide the candle part here for this part of this lesson here. Okay, so look at the relationship here between OBV and the volume and the price. Okay, so the volume looks a little low, but it doesn't really show you whether if money is moving in or out of the coin or stock. This works for stock market, Forex, and all of that wonderful stuff too. So the difference is where you can see the signal trend changes. So see the volume here, the sell volume is still roughly equal to the buy volume. So it's not a very accurate indication of predicting a trend shift. But here where you see that OBV dipped into the red here, even just so briefly, you see where the price followed. Now you can follow the peaks here and how the peak, and you can see the decline in the peak going into the negative, and you can see how the price volume, or the price, follows that same peak. But it's not really, I mean, you still have some buying pressure and some very small sell candles, sell volume candles here. So this is why I like OBV better than volume. Okay, so vice versa here, our price is still trending down. Our volume is still, I mean, yes, you see the big drop here. Now look where these big drop candles are in the volume. Okay, so we're right up here, right at the big candle, but you can see right roughly about the candle before the big drop is where you see OBV just kind of take that spill and dip negative. Now big dumps and big pumps, yeah, no indicator is honestly really going to catch those. But we'll look right here, and you can see this is a clear trend shift here, and I kind of got this blotted out right here in this section under here to show the relationship of the price. So again, so we see some very low volume here, and you see price just kind of bouncing around, but look at the OBV. So the OBV is trending up right here, okay? So this is signaling that money is going to be flowing into the coin or into a stock or something. So while the volume is misleading and it's not telling you anything, we see that the trend is signaling that it's going to be a reversal. Okay, and then right here you can see it take a little spill. And again, this spill is right before these volume candles here. So you can kind of get a heads up when that trend is going to change. So if you were to scalp that, for example, so that was about a 3% drop right there. And you may not catch that whole thing from up here where the OBV kind of dipped down and took that little spill. But if you're quick on the fingers, you probably could have caught, 1.5%, 2% of that or something. Made some good scalp. Okay, so as the price, as the volume here, you can see bigger volume candles, but you see price just kind of really bouncing around. And then as we just keep on moving in our price candles, okay, so the volume is relatively flat. There's no major trend or no major change in the volume, yet our price is still bouncing around. And then you see this drop off in the volume right here. But if you notice, the OBV in general is trending up. So this can actually paint a divergence scenario. Okay, so our price is making a low, and then a lower low, and then a lower low. At the same time, our OBV is making a divergence as well. So price makes a low here and a low here. It makes a lower low here, but a higher low here, another lower low, and then a higher low. So even though our price is decreasing, our volume is relatively stagnant or flat. It's not really indicating any major sell-off, any major accumulation, or anything. It's not signaling much because the volume is still roughly relatively all about the same height in candles, but our OBV is showing our huge, or not a huge trend shift, but it's showing a very nice shift in trend and an influx of money coming back into the coin. So if you play that as a divergence, and we're watching that, and you notice that the OBV was trending up, that means that there would be a bullish reversal. And if you had just plotted down a trend line and you got 1, 2, 3 touches, that's a 3-touch rule for me. I like 3 touches. There. Ooh, my arrows are off. Okay, and you probably get 3 touches out of the OBV. Up there. And then your third one there. So I like a 3-touch rule when looking at divergences. Usually that third touch of a trend line or the third touch off of an RSI or what have you is usually a good signal that there's going to be a shift in the opposite direction that the trend line is going. So in this case, we got 1, 2, 3 touches, and after the third touch, we see the reversal in price right here. Okay, and then 1, 2, 3 touches on the OBV line. Now you don't have to draw this line. You can still see the trend of the OBV is going from a low to a higher low and crossing over this threshold into bullish territory, and you can see the reaction in the price. Now note the reaction in the price versus the volume. So the volume is still relatively low. So if you didn't have OBV and you were just relying on volume, by the time you saw these big spikes, you've already missed the play. But if you were looking for a scalp opportunity and you used this OBV and saw that the OBV was trending up, and you kind of saw this flattening out price right here, or even if you had a trend line drawn off this third touch, and let's just say you even bought right here. Okay, there is almost a 5% play. Let me just go ahead and move this box. It's not helping. This is almost a 5% play just by identifying that the OBV is trending up. And you would have been in somewhere right around here before the big volume spike, which is also just so happens to be the big spike in the OBV. So this volume wouldn't have told you much because you have the same height, or so to speak, of the candles in volume here, but you don't see up here, you don't see the trend that is about to happen here, because these volume candles aren't relating that relationship there. So this is why I think, in my opinion, OBV is better than just relying on volume. Now, vice versa. Okay, so we caught this, and that was a great play, and then all you had to do was make sure you had a resistance line down. Where's my resistance zone? Well, you can go here up to here. Well, I don't want to put that box on there because it's making it all blot out. Okay, and if you had watched any of the previous videos on how to spot support and resistance zones, then I would hope you guys had these already plotted down, so then you know where your targets were to sell. So if you were throwing this down, you got some bottoms of candles here to match up some bottoms of candles here and some bottoms of candles here. And then you got the top of the zone, which matches up all these tops right there. So this was your zone. Let me ooh, that's still too. There we go. That's better. Okay, so we had our zone. We identified that our OBV was trending up. Volume is crap. It doesn't tell us anything. And we see a clear divergence off the OBV from the falling price. Okay, we caught a buy. Let's just say roughly down here when the price stopped to making a lower low here. And we knew where our resistance zone was. And let's say we had a sale at the bottom of it. And then boom. Beautiful 5% scalp. If you had a 10x leverage, so to speak, that's really great profits right there. 50% almost. If you had 25x, that's about 100% profit. And if you're a degen gambler like Gunnar and you had 100x, that would be 500% profit, but you would have had to have some major balls of steel to pull that off. Usually if I'm doing some quick scalps, 25 to 50x is all I would do. So this play would have been about 250% profits. So let's look at, let's just say you got in here. So that profit would have happened in 3.5 hours roughly. And the OBV caught it because you can see the trend of money moving in, or the trend of volume price action moving into the coin, not out. Whereas relying and looking down at the volume, it can be a little bit misleading because you see some bigger volume candles here as the price is going down. So it's not really that great of an indicator. Okay, so vice versa. So we got a nice big push. We've identified our resistance zone. Let's say we took some profit and we want to catch the next play. So, okay, so now look what's going on right here. Okay, so we noticed that the OBV is now trending down. It's trending against this push. And then look at the relationship to the price. So it peaked, and then it peaked, but it didn't quite dump yet. It hasn't quite gone negative, but when you at the point that you see it go negative right here, about right there where that arrow is pointing to, roughly. If I can get, there we go. Okay, so you see that it went negative here, got a small bounce, and then it went back negative. So this started to signal the trend. You see how it was trending beneath this dash line here, so it started to go red and it was getting deeper, was not getting that push back up. So this was signaling a trend reversal again, as it was signaling that money would be moving out of the coin or stock or whatever at that particular point. And again, you don't see that in the volume because look how low the volume is. Now look at the big sale candles right here on the volume. Look at the big sale, and you can see it here in the price, but look where it is in OBV, right here. So it's already too late to try to jump in there and scalp that. But you can see when it crossed negative here, you were already well aware that there was about to be a trend in reversal. Okay, and you can couple that with knowing that we were failing to break this previous high right here. Okay, so two combinations there. The OBV was going negative. Our price action was failing to break into this resistance zone, and then look at that drop. That was another 6% drop. Okay, so let's say you didn't catch the whole thing. Let's say you were going to sell right around down here and try to, catch a double bottom or something off of, let's just say that, let's just say that wick right there. Okay, so you took a short here when the OBV went negative, somewhere up here at the top. You identified where your support zones were because you got these three little wicks right here. So let's just say you even drew a line there because you got a bottom here and you got some confluence here off some tops and bottoms there. So let's just say you even scalped just that part and then you didn't catch the whole move. Okay, so you still almost caught a 4% scalp. Now again, 4% at 25x leverage is 100% profit. So to put that in perspective, now again, if you had caught the buy here from the OBV trending up, okay, you knew where your resistance zone was, and you sold at, let's just say, at the bottom of this resistance zone, which is the top of this area here. So there's 4.5%. So let's just say that was 25x. Let's say you had a 25x leverage times 4.5. Okay, is about 112% profit right here. Okay, so then you turn around and you were watching this to look for a short scalp as you see the price struggle, not breaking into this resistance zone here, not continuing to break into some new highs. OBV went negative, so you turn around and open short, and you wanted to say you identified your support zone and you wanted to short it down to where you had bought earlier. All right, so there's about another 3.5. Let's call that. Let's just say 4%. We'll call that 4%. So that's another 100% profit on two plays. So you could have made 112% roughly, and then another 100% even if you caught down there, because it would have been a miracle if anybody had actually caught the bottom of this, because this was your last line of defense. Nobody probably would have guessed that this would have bounced here and stopped right there. So even if you had just sold, again, right back here where you had previously bought, which would have been a great scalp either way, 112%, almost 100% right there. And that was a great play. So those were two clear plays just using OBV. So we're trending up, which means money is moving into the coin, volume is moving into the coin, and then you see the pop, and then OBV is trending down, and you see the price struggle to break the new high, so you got ready to short, and then boom, the big drop. And then again, you turn around and do it again. Okay, OBV trending up right here. Now this time the price is actually moving with the OBV, which is perfectly fine. And again, after the big sale volume, the volume just really drops off, so it doesn't really give you a clear indication of trend direction at that point. Now look again here, the big volume candles, but it doesn't happen until this peak right here. So if you'd waited until these big candles right here, you would have missed a good portion of this play. But if you had bought, once again, down here as the OBV was trending up, and let's just say you sold at the bottom of this zone again, there's another 5.5%. That's another 125% profit if you had done 25x. And then again, look at the Batman ears right here. So these Batman ears that peaked, and then you can see right after the Batman ears peaked, you can see the trend now dropping off. So the volume is moving out of the coin, and then you see the relationship and the price. So follow from the peak down. So here's the peak, and it's trending down. So here the volume actually did complement the OBV, as both looked really, really weak. I probably wouldn't have played this because this looked like way too much chop and didn't really give a clear signal. Now I probably would have played to here because the OBV was clearly dropping off, signaling a trend shift. I don't pay attention to the volume, but the OBV dropping off was in clear relationship to the price. And then I could have just taken a scalp from, let's just say, at the bottom of this resistance zone to this first support zone, because look where these candles match up right here. They match up with these wicks here and the top of these candles here. So just throwing down your support and resistance zones, and that is key to everything, is knowing where those support and resistance zones are. So you can throw those down and you can scalp accordingly. You don't have to catch the top and bottom of every move because, again, if this you're scalping. So you're just trying to make profit no matter what. And that's really it, guys. That's OBV in a nutshell. And of course, this still does work on all time frames. Let's just remove all of our drawing tools. So again, same scenario here on the 4 hour. Actually, we probably should zoom in. So look at the volume candles here. I mean, the volume candles, they're all relatively the same, so it doesn't really say much. Somebody would say that, oh, this is, an accumulation pattern here. Not really, because it's too much downtrend right here before it goes sideways. So here I can see the accumulation pattern. But again, look at OBV. Right, all through there. Okay, so OBV was trending up. At this point that the price was trending down, so again, it was putting in a divergence. So I probably would have placed a buy right here as these candles were getting closer to crossing the bullish line, which is that dashed line you see right here, guys. And the candle structures right here were putting in a lot of dojis, so it was not signaling that the selling off or the selling trend was going to continue. So if you were looking at maybe a day trade here, 1-2 trades a day on higher time frame, this would have been a great play too, because it would have caught this all the way down here at 9,400. All the way up here to about the 1200 mark, and let's just say you had sold up here where you saw OBV dropping off right here, flattening out. Okay, so where that flattened out was about right here. So let's just drag this down. Okay, so that's about 25% profit. So we would have missed this extra little kick right here, but you can see after the top off here, and then the OBV started to trend down, so it kind of already had signaled the downtrend shift. So you could have made 25% price movement, and then multiply that by whatever your leverage is. And then again, if you had shorted at a decent leverage, and as this OBV dropped off, you'd be at another 15% price movement up to about this point, up to the price that it is now. So about another 14.5%, 15% price movement times whatever your leverage is. Now you probably, and I probably would have gotten spooked right here too by seeing this as the OBV trending up again there, as the price was still somewhat of a little bit of a downtrend. So I might have gotten spooked right there too, and probably would have cashed out and closed that short right there, and then probably reopened once I saw this rollover and then the OBV really starting to hit that downtrend there. So this part was a little tricky, yes. Right here, this little chop zone right here. But if you reopen that short right here or something as the OBV went back down negative, let's just say you shorted from right there. Okay, so about 11.5%. So you only missed, that 3 extra percent. Doesn't sound like much, but yeah, when you have like a 10x leverage on it, that's 30%. So yeah, it does make that little bit of difference, but 10x at 11% profit is still 110%. But then again, look at the volume. Just the volume is dead, and then you start to see a lot of sell-off candle volumes in relationship to the price. But the OBV kind of catches it first a little bit there. So there is a relationship between the OBV and volume and price action, obviously. But what is misleading as when you look at patterns like this, where all of the volume candles are roughly the same, it doesn't really tell you the direction. Whereas OBV, you can see the clear influx of money coming in. And then when you see OBV dropping off, it means money is moving out. The volume is going to be moving out. So it's a good signal to open for shorts. And it works on all time frames. So again, if you zoomed out to the 8-hour even for swing trades, volume move or OBV moving in, and this is that same point on the 4-hour. Now you can see it a little bit better up here, where OBV peaked, and then you can really start to see that drop off right there. So even this was signaling up here at the top at 1220. OBV dropping off, and then now again here we are. So if you had zoomed out to even the 8-hour or so, yeah, much more clear and great for swing trading. So that would have been 15% move times whatever your leverage was, and then that is your profit. So that's OBV, and that's why I like OBV better than I do using volume. OBV really kind of signals where the trend shifts are going to occur, and shows you the money influx or leaving, coming in or out of the coin. Much more reliable than just relying on the volume candles. Because again, if you're trading off of candles, look at all this flat boringness right here. All these are here. OBV trends up right here instead. So this would have been the signal that, okay, the money is moving in, volume is going to be moving in. So if you were a trader and waited for these big green candles for volume as your signal of a trend, you missed all of this down here and probably would have caught the trade here. So OBV is much more reliable in my opinion. That's it. That's OBV, guys. Thank you.